Record. All right, thank you everybody for joining us today. We're glad to have you all here with us. I would ask as you come in that you please mute your mics to not interfere with the presentation with Drew here, and we'll feel free to put your questions into the chat and we'll address them either during or at the end. And also at the end, you can also unmute yourself and ask live questions directly to Drew. So to kick us off, again, this is part of our ongoing monthly webinar series with Happy Camper Capital University, where we bring you leaders and experts in various different financial spaces to help you improve your personal finances and grow your wealth over time. Our guest today is Drew White. He's a good friend of mine, formerly out of Omaha, Nebraska. He's currently now living the RV life on the road, and will be presenting to us from his RV in a RV campground. So fits perfectly with our audience and what we are looking to do with Happy Camper Capital. So we're glad to have Drew here. I'll let Drew do a full introduction, but from what I know of him, he's a former nurse, so he knows how to take care of people and help them. And he's now doing that in a different way. Instead of their personal health, he's helping them with their personal finance. He is also we'll give some credit, say a previous soccer or college soccer player, professional, we'll say that. So I'll leave it there, and I'll pass time over to Drew and let him introduce himself to you all.
Awesome. Thank you, Don. And yeah, if people can, mute themselves just so that I have a monkey mind, so I get a little distracted. But thank you for having me. And I will say, not really a soccer star. Don gave me way too much credit there. But anyways, I'm really excited to share this webinar with you guys on, how to create financial freedom using the infinite banking concept. I personally believe this is really just one of the most misunderstood financial tools out there. And so I really love simplifying it for people so that they can understand what it's all about. And there's just a lot of financial noise out there. So it's something I'm truly passionate about. I practice it with my own money, and really love sharing this with others. So for, those of you who don't know me, Don said, my name's Drew. Modern wealth consultant, authorized IBC practitioner with the firm Create Tailwind. And I do like to have a little fun. I'm not going to lie. And so if you've seen me on LinkedIn, you might be confused because I'm right side up tonight, and on LinkedIn, I'm upside down. So, and yes, I'm broadcasting live from my RV. My family and I are on an adventure, 6 to 12 months, just kind of seeing the world together. I got a 5 and 8-year-old and a golden doodle. And Don actually asked me to do this before we even knew we'd be doing this. We just kind of came up with the idea, my wife and I, and then 2 months later, we hit the road. So, don't give Don too much credit for like he came up with this idea because I'm in an RV. It just happened to be that way. But anyways, I understand all your time is valuable. So let's get it moving. Couple of quick housekeeping items. I'm not a CPA or financial advisor, so it's not to be considered tax or financial advice tonight. Please consult your CPA for specific tax advice. And I won't be giving investing advice tonight either. I'll share what I do, what clients do, but none of that's meant to be considered, financial advice. There will be a Q&A at the end, as Don said. So if you save questions till then or write them down, I'll make sure to hit as much as we can. I know Don was hoping to interrupt me tonight, but it's not going to happen. I'm going to keep on moving through, and I'll probably get to a lot of the questions as we go. So,
so just
real quick,
interrupting. No, go ahead. Sorry.
So I take it everybody can still hear me, right? We're good. You can hear me?
Yep.
Okay, we're good. All right. So right now, you might be concerned about a few things going on in the financial world these days. I don't personally watch the news, so but I'm sure many of you have seen headlines even the past 24 hours that have you concerned. You may feel like you have a giant pile of boxes laying on top of you. But out of curiosity, feel free to type in the comments any concerns that you've seen going on in the financial world, or with your money. And we'll see if I hit them. That'll be interesting to find out if I do or not. But go ahead and type some in. I'll let Don respond to them. I'm going to ignore them for now. But as a side note, if this is you and you're stressed and how you cope, I'm happy to give you Don's personal number after this call, and I think he could probably help you with some coping strategies. But I digress. So the number one topic that I've discussed with our clients this year has been inflation. So again, how many of you have seen a headline about that? Give me like an I in the comments if you have. But it's an important and relevant topic. Every month we're all looking at that number, seeing what it is. And so we'll get to my story here in a bit, but I didn't really fully understand inflation and how it impacted me, my wife, my kids, or anyone really until the past like 4 or 5 years or so. And many of here tonight are savvy investors, what inflation is, but just so we're all on the same page, for anyone who doesn't, on the most basic level, inflation really is an increase in the money supply when more dollars are pumped or printed into our economy. And when that happens, really any of the dollars that we're all holding, they're being actively devalued or eroded. So the impact it has on us is, we really can't save to get ahead anymore like you could in the good old days, like my grandparents could do growing up, right? And so, even the dollar store has turned into the $10 store just to keep up with inflation. I don't know if anybody else's kids love the dollar store, but I hate that place. Like the worst toys ever made, but they love it. I mean, I guess they get 10 toys out of the deal. It's just they all break within 30 seconds. So, but anyways, you might also be concerned about, and I chose this picture strategically. I think it's really relatable. We all go to our stress boulder in the ocean when we're concerned about life and think, right? At least that's what I do, but no. But seriously, before discussing the next concern, I do want to give you guys a quick example of a family that I was working with recently and ask what you would do in this scenario. So try to keep these numbers in your head, or write them down if you can. So their annual income was $36,000 a year. They're not great. Expenses $47,000 a year, so they're already 11,000 in the hole annually. Their debt $250,000, and they could not file for bankruptcy. So you don't have to type this in, but obviously there's not a lot we can do for them, right? Like I would ask you what you would do. I'm not sure what we would do there, but obviously I feel like you guys have caught on. It's a trick question. This is, surprise. This is the US's numbers with just some zeros missing. So 3.6 trillion of income, 4.7 trillion of expenses, and over 28 trillion of debt. These numbers are a little old, so you can fact check me, and I'm sure it's not exactly 100% right, but these were at some point exactly the right ones. And the US can't file for bankruptcy either. So, what can we do? Most would agree if I asked you, are taxes going up or down in the future? I feel like most of you would answer up. I could be wrong there, but so raise taxes. That's kind of, we're most agree we're at historically low rates for taxes, and really outside of inflation, there's really few ways to cover the deficit going on in government right now, as we, just discussed. So that's another huge one right now, taxes, which really leads to me to concern number 3 for people being able to retire someday. And it's kind of why I'm not personally, and this is just a personal opinion, fan of 401ks and qualified plans, because no one can tell me at what rate their 401k will be taxed someday. And it's essentially like going into a business with someone where you put up the money, you assume all the risk, but you don't get to make any of the business rules. And Don's tried to make that offer with me in business before, and I won't do it. So he wants me to assume all the risk, and he gets to make all the rules. He likes that business strategy, but I don't like it. And my issue is that it's a strategy based solely on hope, and I don't really feel like hope's a great financial strategy. It's fine when it comes to your sports, like the Nebraska Cornhuskers, even though we stink, but not really maybe a great financial strategy. So you could get me going on this, because I get a little upset because no one really explained to me sooner in life that I could have really been using that money to build wealth for my family in my 20s and early 30s, had I not been putting it into these vehicles. But and then my other thing is, I'm not really personally a fan of retirement. Doesn't mean that you don't have to be, obviously, because it means to be taken out of service. So I just want freedom now and control over what I do from here on out. So the other concern that people have, and this has probably been, especially the past, I'd say, few months, the biggest topic that I've had with clients is the looming recession. I don't know how many of you have seen this sign. I've seen it everywhere. We're, like Don mentioned, we're traveling around the country, and I saw it in Nebraska. I've seen it in Indiana and seen it in Tennessee. And so, stocks are, getting killed right now. We're seeing the Fed adjust interest rates, trying to combat inflation that they created, but, and people not working or wanting to work. And, historically, what we've seen, or what we're seeing, has led to recessions. And I'm not a financial prognosticator. But I feel most would agree we are either headed into one or near the start of it. So naturally, there's just a lot of fear out there, fear about the future, our jobs, and what all this means for your family, your loved ones, and whoever matters to you. So um, I've listed all these problems. So what are we to do? Complain about the headlines? Watch more news. It's not really what I'm going to do. You can do that if you want, but or we could go out and create freedom for ourselves and our families, become inflation proof. Reduce our tax burden long term, create passive cash flow so we're able to live the life of our dreams on our terms. I don't know about all of you, but my big why personally, just to share with you, is really bigger than any headline or financial news anyway. I want freedom from my wife, Kate, my kids, Winnie and Teddy. And I really just want the most possible time with them while I'm here on earth. I'm sure many of you feel the same way about the people that you love. So you're in the right place tonight. Number one, if you're a Ted Lasso fan, you get bonus points. And if you're not, I won't hold it against you. That's Ted Lasso there. But you're a real estate investor, business owner, high net worth individual, wants to create passive revenue that meets or exceeds your ideal standard of living. And I did say revenue, not income, because revenue and income's taxed differently. So just FYI, you want control of your money and for your money to be working harder for you than you are for it. I think that should be a goal for everybody. We should want our money to work much harder than we worked for it. And we work hard for it. You care about financial freedom and generational wealth. And you're open-minded and think outside the box when it comes to wealth strategies. And I find anybody that's probably coming to a group that invests in, RV campgrounds is most likely open-minded and going to think outside the box a little bit. So I know definitions, right? They're boring, but I have had a lot of calls with people to discuss infinite banking and financial freedom. And it's really a pet peeve of mine when people don't define what the heck financial freedom is up front. I had a lady literally just last week who thought financial freedom meant she had to have $1 million, $2 million in the bank. And so for me, the way I would define it, everybody has their own definition, is it's when your passive revenue meets or exceeds your monthly expenses. So I just want to make sure we're all on the same page when I'm mentioning financial freedom tonight, what that means in my mind. It means passive revenue that meets or exceeds your monthly expenses. I know Don shared a little about myself and I shared some, but you're still probably wondering who the heck is this guy and how did a former pediatric oncology nurse become a modern wealth consultant? It seems like a weird path. So when I graduated, many moons ago as a nurse, about 12 now, I did so with over $150,000 in student loan debt. I was set to make a whopping $35,000 a year, and everybody told me hospitals will pay that off. Don't worry about it. You'll be fine. And that did not work out for me that way. But I passed boards and I was feeling pumped about life. And my dad sits me down and he doesn't really have a lot of financial background, but he knew a little Dave Ramsey. And so, he sits me down to set a budget because being a good dad, he knew the extent of my debt and was pretty worried about me. And so that conversation, when we set that budget, that was when I realized I'd made a huge mistake. So I was 23 and, we're not going to go into this tonight, why an 18-year-old was allowed to make such a catastrophic, horrible, lifelong financial decision for future Drew. I'm still bitter at 18-year-old Drew. I'm working on it. But anyways, I digress. So then that led me to what I now refer to as the dark years. I'm not here to bash on Dave Ramsey tonight, but I did the Dave way to pay off our debt. So Dave, for those of you that don't know, is all about gazelle-like intensity and eating ramen and other horrible food and living way below your means, which is fine. I'm good with that. So we paid off that debt quickly, but a few problems crept in for us, and that one of those for me in particular was really I developed a scarcity mindset, and it was just kind of lurking in the background, and I didn't even really know what was going on for quite some time. So I was throwing all my money at debt. The other issue is, I kind of unfortunately quickly realized as I got married, had kids, you have to work weekends, holidays, mandatory overtime, and you get just these tiny scraps of pay raises, I would call them. And I felt like I was a really good nurse, and I'd be like, great job this year. You're going to get 10 cents an extra for an hour. So just some stuff was just kind of like, for me, not really adding up. Things that, 18-year-old Drew didn't really think about, that, hey, what's life look like when you have a family when you're doing this? And then there's just some things that it's hard to be a pediatric nurse when you have kids and you see other kids that are sick. And so I was looking for a way out. I even did some extreme couponing at one point. So when I say I would live scarce, I had far too many deodorants and all of those things. But anyway, so when we got out of debt, it led me, the Dave Ramsey way. My main issue with is that when you get back to zero, you say, now what? I don't know anything about wealth building principles personally. I didn't really know anybody who was wealthy, and I really had no tools except for a scarcity mindset and thousands of expired coupons. So I knew there had to be a better way than a life devoted to a job I didn't really love. And I realized it took me a while to realize, like many, it was, this really wasn't the future that I ever really wanted for myself. So I think Don mentioned I'm from Omaha, Nebraska. So I said, I've got to find Warren Buffett, the Oracle. He'll teach me the way. He's from Omaha. Unfortunately, this cardboard cutout at a restaurant that he supposedly frequents is the closest I ever got to meeting him. But I went on a multi-year search trying to understand what the wealthy were doing. I listened to podcasts, read tons of books, asked loads of questions, stayed pretty open-minded, which really led me down a path of trying more things than I could probably have time to share with you today. But ultimately, that's when I learned about the importance of real estate, business ownership. And then I met two guys from South Dakota named Bob and Jim, who are with the firm I'm with today at Create Tailwind. And so they taught me the infinite banking system that we're going to discuss today. And shortly after I found this system, I really knew this was what my wife and I should be doing with our money. And I finally had a roadmap. I began implementing it, and I found more success with that than anything else I'd ever tried. And pretty quickly realized too that I wanted to help others skip all the years of wasted time that I spent, and create the life of their dreams, using this system. So I went all in, began teaching others this concept. I've actually let my nursing license expire 2 full years ago. I was kind of still just working here and there just to keep the license up, and said, I like this too much. And so I gave it up, which, leads us to today. I don't know if this is going to play for you guys. I wanted to share with you the first time I started driving out of the driveway with my fifth wheel. Can you guys hear me screaming there? Can anybody hear that?
I don't hear any sound on there.
That's okay. We'll move on from it. But I was screaming the first time we drove out of the driveway with the fifth wheel. So, but so we're currently living a life of geographic freedom on our own terms, being our own bosses. And so, this learning and teaching this concept, has really given me more freedom than I really ever imagined for my life. I honestly never dreamt of living life in an RV and traveling around the country. It just kind of happened. And because of the way that we had set up our lives financially, it really worked for us. So, but I guess that video is probably not going to work for you guys here. So, so wouldn't it be great if you could have a tool that helps increase your odds of beating inflation, as we discussed, and rising taxes year after year? Create financial freedom now instead of some far off date when we're 59 and a half and we're allowed to take some of that money out, and we hope we have enough. Be fully prepared and ready for the opportunities that during this looming recession. I think it's Warren Buffett that does say and if I'm misquoting him, someone let me know, but to be greedy when others are fearful, and fearful when others are greedy. And so I think if we are in a recession, there are going to be some opportunities. And that's, I know 2008 where some people really created some substantial wealth for themselves. And then just free to live life on your terms, whatever those may be, whatever those look like, whether it's an RV or whether it's a house in the country, whatever. And so I have great news for everybody. You can. And I would like to show you how you can have this probably sooner than you think or might have thought, using infinite banking. And some of you, maybe you are financially free, and this might just be an extra tool in your tool belt. But I'll tell you, it's not a get rich quick scheme by any means. I really believe it can help to accelerate your wealth building journey. But I really, there's a lot of people out there, I think, sometimes over promoting or saying it can do more than it can. It's not, I would say it's a get rich slow scheme, which is why a lot of us like, real estate and things. We're not looking for some scam to just get rich tomorrow, right? So you can do all this as long as you remain. I'll take you back to the first point I mentioned. open-minded and think outside the box when it comes to wealth strategies. So, why do I say this, right? Well, like a lot of people, people get really distracted by the vehicle the infinite banking uses, and I was guilty of that myself when I first learned about it. And it's really a distraction. So we are going to deep dive into that vehicle, but before we do, I just want to explain what's really at the core of infinite banking, because there's just a couple of mindsets and things about money that really is the foundation of it first. And so the first is what it says here, is that money has to be in motion. So we believe that, motion is a law of God, a law of the universe. Air has to flow in and out of your lungs or we die. Blood has to circulate in our body or we die. And if water's stagnant, becomes a breeding ground for bacteria, and quite disgusting. So our money, it has to stay in motion. And especially like we talked about with inflation, our dollars are being devalued daily. And then with rising taxes, we want to get things that are cash flow, and that depreciate well too. The second, mindset shift with this is that there's a better place, or at least being open to the idea that there could be a better place to store your money, where you get benefits that, you maybe hadn't considered before or didn't know about, and where you're the owner and not the customer of your bank. So it's just really important to understand those two mindsets first, that the focus isn't so much on the vehicle, but really on the process of keeping your money in motion and becoming the owner, not the customer of your banking system. So now, let's get into it. What we use to create the entire system is a specifically designed dividend paying whole life insurance contract from a mutual insurance company. And I'm going to say that again, because I said a lot there. So it's a specifically designed dividend paying whole life insurance contract from a mutual insurance company. And I'm going to break down exactly why we use that for you in a second. But the first thing you should know is we're not talking about traditional whole life insurance. And I said this a few times. I was Dave Ramsey guy. Dave hates whole life, and so it took me a little bit to get over that. So I'm sorry, Dave. I've betrayed you. But it does need to be specifically designed, and there's a big difference. And so we really are talking about something entirely different, that we're going to use to help us create freedom and live life on our own terms. So bearing that in mind, and bringing your open mind with me, let's go over why anyone would use an insurance contract this way in the first place. So, and I think you'll begin to understand kind of why we do it here. And it's not for the insurance, to be honest. We're kind of reversing it. We're designing this for the cash value, and the death benefit is what I would call an ancillary benefit. So number one is these contracts, you get consistent and significant value increase over time. So the market value increases, like there's no fluctuations like a stock market, right? So when you pay your premiums or your deposit to your bank, that guarantee is locked in every year. So you're not getting those fluctuations. And if that's where you're storing your money, obviously you don't want the stock market fluctuations. You're welcome to take the money that you're putting here and go invest it in stocks, but you don't want that pool of money, right, to be going up and down. You just want that to be going up. And so those gains can never be erased. Nelson Nash, who discovered this concept, he would never say he created it. He says he discovered it. The stock markets were down bad one day, and he was having coffee with someone, and the guy tells the story. He says, you know how much money I lost yesterday? And the guy said, no, how much did you lose? He said, none. He said, I made money. I made money the day before that last week. I'm going to make money next week. And he said, it's a much more peaceful way of living. And having converted to this way, I will tell you, I don't check the stock market, and it is a much more peaceful way of living. I don't get stressed out about what's going on there. So number two is that, inflation protection. So when you combine this with what, we teach, which is buying cash flowing assets, the two together, really, you have a powerful hedge against inflation. Number three, this ties into recession and really just everyday life. So this is really highly liquid. And for those that don't know what that means, it means you have access to it quickly. And so, you are the owner of this policy. It's a unilateral contract. You don't ask the insurance company for the money. You tell them, how quickly you want it and where. And so, we need quick access to money, right, to take advantage of opportunities when they arise, and to keep our money in motion. So we need this to be liquid to be able to use it for investments and keeping that money in motion. And you don't want to have to jump through all these hoops to get it. So that's really important. It's going to be tax-free. So the money, so if you're familiar with a Roth IRA, the money's going to go in there and it's going to be taxed similar to a Roth IRA. So it's already been taxed. So once it goes into that system, it's tax-free forever, and you're going to get tax-free guaranteed growth in there forever. And so, we don't want to pay future taxes on any of the money in this. We don't want it reported as income tax. We want to pay those taxes, I personally, at least, on the money once and never again. Especially when we know what the tax rate is. And then and the other thing too, and it's state dependent, but the majority of states, this is also creditor protected, but you want to look at each state. I don't want a blanket statement and someone lives in a state where it's not, but also it's going to produce cash flow over time in addition to our other cash flowing businesses and assets. So, even though I'm personally not a big fan of retirement, we do have people using these for income replacement. A lot of business owners are going to use this for income replacement when they get older. And to be honest, the numbers may really surprise some of you what these policies can do if they're structured properly in like 15, 20 plus years. So, and then the bonus quality I would say is that it's multi-generational. So, because most of us aren't really just building wealth for ourselves, but for future generations. And one of my core values, my core principles that I live by is that I truly believe that a blessed man leaves an inheritance to his children's children. So we can use this system to do exactly that. I'm going to try and share a video because I want to show you how we use this in a very broad overview. So I may need Don's help. It has not always worked for me when I've done this. I'm going to try and click it, Don, and we'll go from there. And you'll have to tell me if anybody can hear it. So give me a thumbs up or thumbs down if it plays, Don, and you can hear it.
Yes. So far, just see the circle.
So far, it's not loading. No, there we go.
Maybe.
Ooh. Can you hear it?
Nope. Not really.
There we go.
Okay,
I got it.
That's it.
On handwriting. Okay. So through a really unique system that we do,
Is that working?
in that we use a specifically designed insurance contract through a mutual insurance company. All right, and no judgments on handwriting. Okay. So our goal here is to use it for cash value. So the death benefit, I'll put it over here. It's what I would call an ancillary benefit. So it's not really the focus of this. We do it backwards. We're looking at putting cash in this system, and we're going to use this cash value, which by the way is going to grow uninterrupted, tax-free. I'm just going to put a G for guaranteed at about 3% right now. Depends on which insurance company you work with. The key being here, it's a mutual insurance company because you're going to get certain benefits. And then on top of that, you're going to get dividends. And the key to this whole system is to not leave this money here. All right. But when you use this money, you cannot interrupt the compounding going on here. So you get that tax-free guaranteed growth plus dividends inside your insurance contract, no matter what. Okay. So you can think of it as replacing a savings account, checking account, wherever you're storing money, because you're getting these benefits where you're getting 0.02%, 0.06%, I don't know, at the bank right now, right? And then if you use that money at a bank that's in your bank account, you lose out on this uninterrupted compounding that we're talking about right here, okay? So you're gonna take that money though, and you're gonna use it to go buy, real estate or business, anything that I say is a cash flowing asset. And why? Well, these are also tax favored. So you're gonna have tax favored growth here where you go buy real estate. You can use this to buy all these, right? And you're gonna go buy any kind of cash flowing asset. We have some people who they do like the Carvana thing and they lease out cars, whatever, or some people who use this system for hard money loans. And then the next step is you're gonna pay that back. And as you do that, any dollars that went out of your system are now back into your system, right? So it's a closed system. So that money comes back in and you keep reusing it. And all the while you're getting this tax-free guaranteed growth plus dividends. You're also now have something that's cash flowing, right? So you're getting this rate of return. You're getting basically what I would call an internal rate of return here. You're getting external rate of return here. You're getting cash flow. And then there's strategies we can talk about here with interest, where you can deduct that back to those payments back to yourself if you've got a properly structured LLC, which I'm not a CPA, so you need to talk with someone about that. And so this is a whole system that we use to do this, to create more financial freedom and passive income for ourselves. And all of this is growing tax-free guaranteed. And then the last thing is you now have a legacy return that you get to pass down someday. So I mentioned this isn't our focus, it's an ancillary benefit, right? But the real focus is using this cash value, putting our money into motion with this system. And it all starts with a specifically designed mutual insurance contract.
All right, I hope everybody could hear that. Microphone back.
Yep, should be good.
Okay.
I heard it.
And can you still hear me? That's the real big question here.
Yeah, we can. So you're
Okay.
good.
Okay. So now I just want to take you guys through some real client stories of, you know, people that I've worked with, people that we work with that, you know, use their systems, including my own. And so one thing you'll find with infinite banking, I'm showing you one way that we believe in really strongly, but that there's a lot of creativity with this. So these are not the only ways, and you're going to find people who don't want to work with banks. You're going to find people who want to, you know, leverage bank money still, and it's everybody's system's different. So when I show you this, I don't want you to think like, oh, this is the only way. There's really a lot of creativity out there on, and even how I use my system has been different than I probably anticipated at times. So this is my link. This is how I looked on LinkedIn to people. I mentioned the upside down profile. So some of the ways that I've used, you know, my infinite banking system, real estate, obviously we've discussed, so you kind of get that. Another one that I came across was a tax strategy where you put your, you know, I have to set money aside for taxes since I run my own business and have a few other side businesses with my wife. And so instead of storing it in a savings account, I started storing it here because I'm earning that interest that we talked about. And then when I pay Uncle Sam, I'm still getting that uninterrupted compounding. I've done some private hard money loans for real estate deals as well. And again, I get to set the terms on that. That's, you know, my money. And so, and then we actually even the fifth wheel camper that I'm in tonight, we self-financed that because the bank, the best offer I got back was like around 10% for like 12 years. And it was just an absurd number. And, you know, I already had some cash flowing assets that were going to pay for this RV. And I thought, why not just pay this myself and have the assets pay for it. So that's, you know, that's what I did. Though Don wishes I would have put it in a happy camper. He said a few times, but I went that route instead. So, and again, that, you know, that's just another unique way I didn't ever anticipate. And then there's just been multiple other unique opportunities out there and future use for us. You know, my wife and I are on the hunt for a multifamily deal for ourselves. And so that's the way that we've used it. You know, the main lesson for me that I've found since I started doing this is I wasn't having opportunities coming to me. And I'm not saying that infinite banking is this magic cure all that you'll have opportunities, but I will say that cash finds opportunity, and opportunity seems to find cash. And so before I had this system, our money was, you know, tied up in all those vehicles that we discussed before, the qualified plans, and I didn't really have any opportunities coming to me. And now I'm having multiple opportunities coming my way, including, you know, just today actually. And so these have really allowed me to do what I'm doing today, presenting to you all while traveling the country and exploring the US with my wife and kids in an RV. Next, this is Marcus and Nikki. And so they have a land investing business. For anybody curious, they're using, it's called Land Geek. But so Marcus, when I met him, Marcus has a hatred for banks. And that's not a requirement, okay? But he doesn't really like banks, hated having to go to them for deals, slowed the process up for him. And then his main thing he didn't realize was that his money could be earning compound interest inside of his infinite banking system while his money was also in a deal at the same time. And then he said, I'm getting older. I have concerns about how to pass this wealth down tax-free to his kids and his grandkids. And so, you know, we do what we call wealth strategy calls, and we work with our clients for free. And so, you know, we sat down and mapped out a plan how to use this. And so the way that Marcus and Nikki, and I discrediting Nikki, I shouldn't have, because Nikki actually does more work than Marcus. I just talk to Marcus the most. But so we set up their system, and they started, you know, pretty large. And so how they use it though is that when they have a land opportunity, you know, they call up the insurance company, they tell them where to send the money, how quickly, and then they do a hard money loan between their LLC and their insurance contract. And so then now when they go to sell, they have, you know, the seller, other people's money are paying back that loan. And their business is doing so well that he said at some point here, other people's money are going to be paying as premiums. And that really is our goal with this, is to show people, you know, within like 5 to 7 years, sometimes sooner, how, you know, the goal isn't for you to pay your premium, it's to use other people's money. And so so they will do these hard money loans, and then they use the buyer's money to pay back that loan. And they have this closed system where they loan to themselves, they pay that back, and then they're in Texas, so they're able to, their CPA says they can deduct those interest payments back to themselves. Again, state dependent, check on your, check with your CPA. And I do chat with Marcus fairly regularly. So a couple months ago, he was like, Drew, if I never have to deal with a bank again, I'll be a happy man. And so far he hasn't had to, though he's doing well enough. I was like, you're good. He was just talking about he's going to need some extra capital soon. So I told him, I was like, I think you're going to be having to work with a bank pretty soon. But and then the next one is Paul and Ravana. So they own 4 coffee shops, roasting company, and a catering business, as well as a few rental properties. One of the rental properties. So Paul doesn't love banks much either, but he will still leverage their money. And so what he does is actually he uses a system and he does a down payment. So he did 2 things. So he did a down payment on his land, which he's currently building, actually almost done. It's pretty unique. They're doing storage containers for a coffee shop. And so he used that for his down payment on his land, because he's still going to get that interest in his account. And then he also used it for a down payment for an Airbnb. And when I first started chatting with him, he had all this money sitting in a savings account and had no idea that he was, number one, not getting much interest from them. And 2, that he could still be gaining interest when he put that money to work. And so, and then he also had some things where like he would need a roaster for his coffee business. And instead of getting a loan from bank, he was like, why not just loan that to myself and, have my customers pay that back. And, and then for him also, Paul and Ravana, they didn't have a retirement fund or anything like that. So they were concerned about, maybe, their retirement plan as their business. But he also wanted to know that he could have some cash flow coming in as he got older and have some income replacement. And so that's one of the cool parts of the system, is if you don't use it, you can have some great tax-free income, but if you use it, you're going to have even more. And he's probably actually going to have to expand his system and do a second policy soon. And so they really wanted to, they have 3 kids too, and they wanted to be able to pass money down to their kids as well. His favorite part probably of all that he tells me is he loves the flexibility because he gets to set the terms of that loan. It's an interest only loan. And so, for him, this first year when he opens his coffee shop, he doesn't want to have to pay that money back. Obviously the business probably will do well and he will pay it back, but he doesn't want to have to. And same with his Airbnb. He's like, I want that to cash flow and then I'll pay that back. So he likes that flexibility. We coach to be what we call honest bankers with yourself. So it is good to pay that back. Next, I just want to go over here, before we get in the Q&A, just some frequently answered questions. Having taught this a few years now, I can almost predict, predict what the question will be, what some of these questions will be. And then if you have extras, we'll definitely hit them. But so probably the number one question, that I get from people is, why would I do this versus, using a savings account or a self-directed IRA or et cetera, or whatever. And, first of all, I would say you have to decide what's best for you. You all know that. I can't talk you into this, being so great. I think it's awesome, but it's up for you to decide. I can tell you why I determined those were not the best options for me and my business and my family. And so to answer that, really, most of you on this call, I think probably understand the power of compound interest. I'm sure many of you seen the penny doubling example, and I'm going to show it to you anyway, but it's what happens to a penny if you were to double it every day. And it's an extreme example. The point of it is to drive home the power of compound interest, which supposedly Einstein said was the 8th wonder of the world, though I fact checked. I couldn't find that he actually said it anywhere, but most investors would agree compound interest is an incredibly powerful financial tool. And so let's just take a quick look at the penny example here. So, we're going to double it. We're going to double it each day. And by the way, if anybody wants to do this deal with me, I am totally open to that. Especially you, Don. So, it starts out slow and I'm going to speed it up a little bit. So by day 21, we're at almost 11,000, 10,500. So day 22, let's say we're about 21,000 and we go put that to work in a real estate deal, which is a great idea. So in our account where the money was, we're now back to a penny. And so by day 31, we've got a real estate deal, which is awesome. But in our other account, we've got $2.56. And so, you're probably thinking like, yeah, I invested that money in a cash flowing asset like real estate business, so I'm winning. And you totally are. And you're further ahead than most, but for me, that's not really what I care about. I care about what's best for me and my family, and not comparing to others. And so, if I could get compounding in my account and in my deal, I mean, that would be ideal, right? So, and that's what I want to show you here is, just kind of where the power of, I would say, infinite banking comes into play. So we'll double it out again. We'll get to day 21 or day 22. So we're at 10,500. You get to 21,000, and you still put the money in the deal, but your money's still compounding in your insurance contract. So by the end of it, like I said, Don, if you want to do this deal, I'm down. But 10,737,000, and that's the power of uninterrupted compounding of your money. Obviously, an extreme example. So the second part of this, though, of this frequently asked question, what I say to people is, you're going to store your money somewhere. Why wouldn't you want it in a place where you're the owner and not the customer? And right now, we're all customers of a bank if we're using a bank. So if you own a grocery store, if you own a coffee shop or whatever, would you shop at your store or would you shop at someone else's? I hope the answer is your store. If not, we need to talk after this, because you should be. But so why not put your money in a tax shelter that you own and control first, and then deploy it. So the takeaway here: always be the owner, not the customer. Frequently asked question number 2, and this is kind of a 2-part question. Why not just skip this step and invest in real estate or buy a business? Why even use the insurance contract at all? And so we kind of address that with that first part, about compound interest and being the owner. But the other thing going on here is we've always been taught to think about money in either ors, so it's either in this account or it's in an investment. It's either here. And so a lot of times I know someone isn't really grasping the concept, and I don't blame them. It takes a bit to learn. If they ask me this question, because what we're actually saying is do both. We're just saying change where you're storing your money, put your money here because you're getting all these benefits, and then then go put it into your real estate deal or your business. And so I always kind of chuckle when someone tells me, well, I can't do it right now because I got to do some real estate here in a few months. And I'm like, no, I'm saying do them both. You get growth inside your system and your deal at the same time. So, and then number 3 isn't whole life insurance. I get this one a lot, and I get it. Isn't whole life insurance a bad investment? And people are usually surprised when I say, yeah, actually it is. And the reason I say that is twofold. Whole life should never really be considered an investment. We're talking about where you store money, not where you're choosing to invest in. So that's the first part of that. It's kind of a misconception. And then, so I personally don't think whole life should ever be considered as an investment. And then 2, a lot of times when people are saying it's the whole life insurance is a bad product, bad investment, they're talking about traditional whole life insurance, and traditional whole life insurance is not a great place to put your money, I would say. But specifically whole life insurance, that's a far different story. And so, whether it's because Dave Ramsey told you or Sue Zorman or another financial babysitter, most people are woefully confused about whole life insurance and how to turn that contract into a bank. So, and then last FAQ here is, how much do you need to put into this for it to work? That's probably actually my number one by the end of this as I get. And so that's a very personal question. There's no right or wrong answer. I'll tell you from experience, that every single client that we have, even the ones who think they didn't do this at first, they usually start too small. I did too. And then they expand their system. So they have multiple policies. It happens almost every time. But I had a client, just last week, they started one for $6,000 a year. I had another client just a few months ago that started one for $1 million a year. So there's a really wide range. It really just depends on the person's unique situation, how much they want to get into their own system. My personal goal to share with you is to get all of my income into this system long term. And it seems as I'm doing that, my income keeps increasing, which, I'm okay with that. But our average client is really doing this on a pretty large scale. We're a smaller firm, but we have people doing this at a very high level. So we do a lot of like $50,000, $100,000 plus. But everyone's situation is different, and we would never turn anyone away and say that's too small for us. And we never tell you what numbers that you should do. So if you're interested in learning more about this, this is not really like the whole point of the call. I really am just here to educate and teach, and that's what Don asked me for. But if you do want to learn a little bit more, I do wealth strategy calls with people, and really just take an educational approach. So you're not, I'm actually kind of bad at follow up to a fault. So you're not gonna, if you book a call, you're not gonna get somebody who's gonna hound you for months. You can ask Don, right? Don, I've never hounded you. I do harass you on LinkedIn a little bit, but so I just really enjoy educating people on this misunderstood concept. So I want to share with you really quick what we go over on that call, if that interests you. So number one, we usually discuss your unique situation, your long-term desires for your wealth, your business, your family. And then we go over a more in depth, because the infinite banking it's a process to learn. So like if someone told me after this that they wanted to sign up tonight and get started, I would honestly probably tell you no, because I think you need to learn more about this, and it's just an educational process. So, but so we go over how the infinite banking strategy we discussed today could work for your specific situation. Then we map out a system that will best help you to create financial freedom moving forward. And we're happy to share with you how we do it, how we've seen others do it. And then I always try to give bonus resources, free resources at the end of a call. Because like I said, it's an educational process. And so this is truly our Create Tailwind's business model, is that we say, we will educate you until you say, this is for me, or no thanks, Drew, thanks for the time, see you later, it's not for me. And no harm, no foul. So if you do want to book a call, ibcdrew.com/call is the way to do it. And I'll put that in the comments here really quick, just so it's a little bit easier. There we go. And yeah, so we'll just go over it a little bit more in depth, how that strategy works, maybe talk numbers, things like that. That's really how we work. And then real quick, I'm going to get to the Q&A. I do want to thank everybody that's stuck around this long. I don't really like to do the hey, I'm going to dangle the carrot and give you a free gift at the end thing and trick you into staying. So if you stayed long enough, I want to thank you. I do have a free gift here, and it's ibcdrew.com/gift. This is how we set these up for people. So, maybe you didn't jive with me, which I'll be totally devastated if that's the case, but no, I'm kidding. But then you can set it up for yourself. Oops, I just max screened the direct messages. There we go. Did that come through on the chat, Don, to everybody?
Yeah, you get everything in the chat. Yep.
Okay. So that goes over we call it how to build your own wealth warehouse. It shows exactly how we set it up for clients, how our team at Create Tailwind does this. You can use it as a checklist, whether you work with our team or not, though I will say I personally think we're the best, and we coach people for life for free. And then there's a few bonus strategies in there for anybody that has some different legal entities set up. So I've taken enough time. I would love to get into the Q&A. I think I can pull up the chat here and see what some of these are. For some reason, I'm on full screen with the chat though.
Yeah, I can read them to you, Drew. So,
okay.
So we've got Preston, and I think there's a question earlier also from Ethan. So I think it's similar. My understanding of it is, do you recommend certain insurance companies over others to work with on getting started with creating the life insurance contract?
That is
a great question. As you mentioned, there's several different insurance companies that could use, but is there ones that are better than others for that? I think is what the question is.
Yeah. There are definitely ones that are better to use. So there are some companies who they really don't like the infinite banking strategy. And if it's like, we send a cover letter about each person when we apply. And there's some companies, if you mention infinite banking, they don't want your business. So we do vet pretty strictly the companies that we like, and I'm happy to share them. It's not like a secret. So there's two that we prefer right now. Emeritus and then Lafayette Life Insurance would be the ones. We primarily work with Emeritus right now, but we will do, and we can work with anybody. So, that's if someone's like hung up on it and like, well, you only work with these two, we will work with others. Those are just the ones we prefer for a lot of benefits. They're very infinite banking friendly. Emeritus has really high early guaranteed cash value, which is important to us. Dividends aren't ever guaranteed, even though they've always been paid through. As long as you're working with a good company, they should have always been paid for hundreds of years. And so we're really strict on that. Like, is it a company that's financially solvent? How many years have they been around? And that's in that wealth building guide too, kind of our vetting process as well. Or that, not wealth building, but how to build your own wealth warehouse. So I hope that answers that question. Any other questions?
If anybody else has any questions, put them in the chat, or feel free to unmute yourself and ask directly to Drew as well. I just want to say first, Drew, so when I first heard about this concept myself about like a year and a half ago or so, it was just, to me, it seemed like mind blowing. I was like, wait a second, I can use the same money and basically double dip it, right? Like you said, instead of pulling from the bank and having that money go away and no longer earning interest or anything, I can still use that same money to buy a cash flowing asset, but it's still also building income or wealth from that source to begin with. So never technically pulling that money away. So I just thought that was just an amazing concept when I first heard about this.
Yeah. And it's one of those things that it takes a little bit to understand, and that's normal. So like nobody's going to probably come away from this tonight and be like, oh my gosh, I get it. It makes so much sense. But it's pretty unique, and I wish more people had not been turned off to it, like me beforehand, because it's one of those things that I think can be a great tool in people's tool belt, and it has been for me. And I'm a huge fan. So
yeah, I think there definitely is a stigma to it. You say life insurance, like it's totally. But once you understand, okay, it's not, like you said, it's not the traditional life insurance. It's unfortunately just has that stigma name to it, but it's actually something else completely different, really. But yeah, so we have a few more questions here. So
sure.
Karthik is asking, so she says, if I'm understanding it right, am I borrowing the amount at max equal to what I store in the account in infinite banking? And if so, what is the interest rate? And does the interest and principal go back to my account? So I think she's is asking if they're essentially borrowing that value, and then the interest that you're paying back to yourself on it, I think. And if we're not understanding that correctly, please feel free to unmute yourself and ask it as well to clarify.
Yeah, I think I get it. So she's asking, if you borrow the amount at max equal to what I store in the account in infinite banking, what is the interest rate, and does the interest and principal go back to my account? So there, I'm going to answer that question, and then I try not to get too in the weeds on people and confuse people. I often have that problem. So if I'm not clear, feel free to reach out to me after this. So right now, the interest rate, it's a simple interest only loan. So at the end of a year, the insurance company wants 4% simple interest back and that's all they want. They don't care about principal, but any payments that you make back goes to principal first. So you actually decrease that amount. So if you had 100,000 and you paid back 50,000, you only owe 4% of 50. And where the banking part comes in is that we say, charge yourself, a reasonable interest rate, in addition to that 4% simple. And so some people get, hung up on that, but, like Don, if I said, I'll give you $100 million, this is an extreme example. And Don, if you want to do this deal with me, I'm in. But if I give you $100 million and at the end of the year, all you got to do is pay me $4, like, are you taking that deal? Right? Because you know what to do with the money.
Yeah,
so
definitely. I can multiply that money many times over and easily pay back that. Yeah,
right.
No deal.
People get hung up on that, but if you're putting it into the right vehicles, I mean, it's no problem. So yeah, you would borrow against what you're putting into your account. I hope that answers that question. Clarissa, I see your question. So do you mention that the 3%? Yeah. So right now, the insurance companies, depending on which one you work with, are about 3 to 4% tax-free guaranteed growth plus the dividends. So I think 3.25 is about like kind of the average. So how does the value diminish when initiating a policy? I don't know if I understand that one. I ask it for clarification.
So if you're there, you can unmute yourself and clarify. I guess my interpretation would be as if, I think you're saying when they start the policy, are you able to borrow that full amount right away, or
that's basically what I'm asking. I'm saying if you fund a policy with, let's say, $100,000, how much of that initially is available to utilize for a real estate transaction?
Got you. Yeah, great question. And this would be a thing where, like, again, I don't want to confuse people because it's a really visual. I'm going to answer it, but I try to draw it out to show people why they can, so they can see it. And there's a lot of different people practice this a lot of different ways. So you're going to get people who tell you you can get 90% of your cash value up front. So we say 60 to 65% of your cash value in year one. And so it's the cost of starting your banking business. There is a cash drag to it. And I can show you how you more than make up for that quickly. And that's a real big hang up for people. I mentioned the 90% thing because I do want to tell people, like, if you find someone preaching 90%, 80%, 70%, we've checked with the underwriters, at Emeritus and the companies that we work with, and that policy, there's a line you can't cross to make it taxable, where it will become taxed like a qualified plan. And so a lot of these policies out there that are designed that way, they are going to end up being taxable vehicles in like year 10. And that's also honestly a really bad way to design it because, and I don't want to get into the weeds. And if someone wants me to draw it out and show why, I'm more than happy to do that. I'll just tell you that you want to design it at that kind of 60 to 40 ratio I mentioned, because it's going to be really efficient later on and you're going to get a lot of growth. So I hope that helps answer that question. I can get too in the weeds, but I would just say if you get a 90-10 or an 80-20 person, come chat with me. I'm happy to show you why I would not do that. I wouldn't set that up for anybody. I'm a Nelson Nash purist, so Nelson was keep it 60-40.
Okay, can I ask another question? How does your age affect the percentage that you can immediately withdraw?
Yeah, so that won't affect the percentage that you can withdraw. It's gonna, if there's a death benefit part to this, right? There's an insurance part to this, so we have to justify it. But our goal is typically to get you that 60 to 65%. A lot of times what happens, maybe if someone's unhealthier or women get far better rates than men, guys, I hate to break it to you. And so a lot of times that just changes your death benefit amount if you're unhealthy or, older or something. But typically it doesn't have
At what age, presuming you're healthy, at what age would it not make sense to financial sense to use this kind of policy? Like where's the tipping point? Like if you're under X age or over, like where's that?
Yeah, that's a great question. So there's strategies because you don't always have to insure yourself. So you can insure a business partner, you can have a key employee, you can have kids, grandkids. In fact, my parents are working on setting this up for all of us kids, and that's how they're going to do it. They're not going to, they're both in their high 60s, early 70s. So for them, yeah, the cost of insurance is getting a little bit high for them. I did meet with someone the other day that was in their mid 60s, a woman, and she's very healthy. So because she was older, you're right, like her cash value, she's probably not gonna be able to get 60%, right? She might get 50 to 55. And so it has to be what each person's situation, but and that's where I can probably more on like a personal granular level break it down for people. And there's actually a great article that answers this question more than even I could get in depth on about, am I too old for IBC is actually what it says. So.
Got it. Okay, thank you.
Oh yeah, yep, no problem. And if you have other questions,
good point there, as you're saying though, you like you said, you can set it up for another person, not say yourself directly. You said you can set up for your kids, grandkids, but you still control that policy to still borrow against it and everything, but they're just the beneficiary of it, essentially, right?
Yeah, yep. One of my first clients I worked with was he was pretty unhealthy and a heavy smoker, and so he said, he was doing legacy planning, and that's okay with the insurance company. We're upfront about it, and so we took out 4 policies on his kids, and that was how he started it. He controls them and he uses them, but then the great part is he's going to pass that to them when he passes, and so now they get all that cash value and control it. I want to answer Preston's question, and I don't know if you need to end it or not, but so Preston, you can borrow against it as soon as that first check clears. So every state has some money laundering laws and all that, but typically we say like 21 days, and then after that, the rest of the year, it's very liquid, as I mentioned. So you should be able to borrow against it quickly. Yeah, so it should. But if so I have had people, unfortunately, there's people out there saying use this with variable universal life or universal life. And I personally, I don't have enough time to get into why, but I wouldn't sell it to my worst enemy. those have failed multiple times. But so I have had people that meet with me and they think they have an infinite banking policy, and turns out they can't borrow anything for like 5 years. That's not infinite banking. You should be able to use this right away. That's the whole goal of it, is to put it to work right away. So.
Excellent. Yeah, I think we're, definitely are out of time here, but, I want to make sure we cover that I think that the main point for most people here that are most likely real estate investors is they want to know that you can set up this policy, like you said, use that money to essentially borrowing from yourself to invest in or purchase real estate, like for example, investing with Happy Camper Capital, get cash flow returns from that, and use those cash flows to pay back the interest, even pay back the loan, and then you're in that cash flowing asset, which eventually will pay that policy back anyway from what the amount you borrowed from the cash flow, and of course the equity at the end, and then you still get the extra benefits from that real estate as well. And since you can just keep doing that and recycling that money over and over again, and essentially more quickly create yourself, your own, like I said, your own bank to use to keep buying more.
Yep, great job, Don. You should be presenting. And I just want to say thank you, everybody, for sticking around as long as you did, and for Don, thank you for having me on. I really appreciate you and your kindness and your friendship. And so I really enjoyed this, and I do appreciate the opportunity, and I'm glad it worked inside the RV here. So somebody told me it looks like I'm in a halfway house. I don't know if that's true or not, but
Well, either way, we're glad to have you here, Drew. Thank you for sharing, and thank you everybody for attending. And if obviously you have any more questions, feel free to reach out to Drew. Again, his link's in the chat there. It's ibcdrew.com/call. And you can also find him on LinkedIn, of course. He's very active on LinkedIn. That's where we met originally.
Yeah.
So yeah, feel free to reach out to Drew, and hopefully, you'll check it in Happy Camper Capital and the deals that we have coming, and possibly use this policy with that. And with that, we'll end it here. And thank you everybody for attending. We'll see you next month.
Thanks for your time.
thank you, everyone.
Thanks.